Petty cash fund. What is a petty cash fund? Petty cash fund is the amount of cash kept on hand to pay for minor expenditures, as sometimes writing a check may be burdensome or it is not accepted. Examples of small payments include fuel, deliveries, office supplies, and postage. Now that we know what petty cash fund is, let's take a look at the process. Step 1. Establishing the fund. Businesses choose an employee to be the designated custodian of the petty cash, who then cashes a check to a certain amount, which establishes a petty cash fund. The business must record this in a journal entry. Take a look at an example. Suppose on the 1st of September, Lily's Lollies cashes an $80 check to establish a petty cash fund and gives this cash to the custodian Charlie. The following entry is recorded. An $80 petty cash fund has been established. Step 2. Making payments from the fund. After the petty cash fund is established, cash is now used to pay off qualifying expenditures. Payments can be broken down into two methods: cash taken from the fund to make payments, or employees can seek reimbursement for payments they personally made. Custodians should collect receipts and authorize the use of any cash. These payments don't require journal entries. The final step is replenishing the fund. As the cash in the fund decreases, funds must be replenished. To do this, remaining cash in the fund is counted, and the business cashes a check for the amount that brings the total cash fund back to the original balance. Receipts are used to record these expenses. For example, on the 30th of September, Charlie examines the petty cash fund and makes the following report. This shows that the fund requires $60 to be fully replenished and that receipts are totaling to $60. Thus, Charlie would cash the check for $60 to replenish the fund and records the following expense entry. Entry increases the three expense accounts relating to the expenditures and decreases the cash account for the amount of the check. Since Lily is recording the expenses resulting from fund use, the entry reduces assets and equity. This entry is repeated every time the fund is replenished. Remember, replenishment should always equal the total amount of receipts. When this is not done, you get cash over and short. Sometimes the custodian will not obtain all receipts or give incorrect change, which results in discrepancy. This is charged to an account called cash over and short, which is a temporary account which may have a debit or credit balance depending on the situation. And that's everything you need to know about petty cash funds. Thanks for watching.